Who needs lower interest rates the most? Who does? Right? We all do, obviously. I mean, yesterday, I was looking at the Dollar General's earnings. Okay, stock topped at 250. Now, yesterday went down 30% more, down to 84. Dollar General has not been down to that level in 20 years. And during the conference call, they said, well, who shops at Dollar General? The average American, right? Not the billionaires, not the millionaires, but the average American. They said the average American is definitely suffering from the ill effects of the last 4 years of inflation. And who made that up, right? Who brought inflation upon us? We did. The federal government did with borrowing and spending and too many dollars chasing too few goods. And if a Dollar General is saying that, right? I mean, are we going in a recession? I'm pretty sure we are. But I'll talk about the lower interest rates and its effects shortly. So who needs the lower interest rates? We do, right? We know what has happened to our mortgage rates. If you have an adjustable, we know what happened to our credit cards. We know what has happened to car loans, right? I mean, when interest rates were at zero, everything was fine. We could go borrow at 2, 3, 4%. What happened to credit card interest rates, right? Now, minimum credit card interest rates that I see out there, even if you have good credit and if you carry balances, 25%. Well, and on the back credit is up to 40, 50%, right? So that's crippling the average American. And Dollar General said it clearly, and stock, I mean, was down 39 points in a single day. It's crazy, right? So the average American is suffering. They definitely need the lower interest rates. But I have a bigger picture in mind here. We all need lower interest rates, obviously, right? So but what do these banks do? What do these lenders do? Right? They jack up the rates really fast, and then they never lower it, or they very, 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 very slowly lower it. Okay, so is the Fed going to lower interest rates? Absolutely. In September, there is one coming, and if you look at the charts, the dot plots, as they call it, interest rates actually, it looks like they're going to be cut 6 or 8 times between now and the end of 2025. Why does the Fed cut interest rates? Fed never cuts interest rates when the economy is booming, right? In fact, they raise interest rates when the economy is booming. So my point is, yes, the average American definitely needs lower interest rates, but I think the U.S. government the Fed needs lower interest rates more than anyone. So here's the shocking stat of the day. U.S. net interest payments on national debt hit $861 billion over the last 12 months. Okay, we're talking just the interest payment. As we know, I talk quite a bit about it. The deficits, the national deficit, just hit 35 trillion. In another 100 days, it's going to hit 36 trillion. It goes up a trillion every 100 days. Well, that means, right? It's like an IOU. We issue IOUs called bonds, bills, notes. We sell it all over the world, and we finance our deficits, right, by increasing the federal deficit. Okay, so, well, there's an IOU. There's an interest rate attached to every IOU, okay? And we have to pay interest. Literally, we have to pay that. Just like you have a car loan, you pay the bank interest. Well, we have to pay our note holders interest. So just the interest on that 35 trillion hit 861 billion. Think about this. It's almost $1 trillion in interest we're paying. And how are we paying that? We're printing it and paying it. It's not like money is coming in, right? Our budgets are completely blown up. It's exploded. So interest costs have nearly doubled in the last 2 years. Exactly, because when we had zero interest rate policy for how long? 10, 14 years, 15 years? The government interest outlay wasn't that much. Yes, we still had the deficits. Yes, we had the IOUs. But the interest on those bonds, the coupon, as I call it, on those bonds was not that high. It was like 1%, 0.5%, 2% at max. Well, when the Fed raised the rates, right, to kill inflation, which was created by them, and Washington, obviously, as monetary policy follows fiscal policy. We know that. So when the Fed raised those rates, well, not only your credit card rates or car loan rates went up, but the Fed's IOU rates have gone up because every day they issue hundreds of millions of dollars worth of bonds and notes. because there are ones that are maturing. So on these new ones, for the buyers to buy it, they have to make it attractive. They have to give them a return. Well, now the federal government is paying 4 or 5% on those bonds and notes, right? Short-term bills are 4 or 5%. So our interest cost has gone up to 861 billion, and I'm sure it's going to break $1 trillion shortly. So this does not include 100 billion of Federal Reserve payments handed to banks as interest payments. How is that happening? Because the banks, pension plans, mutual funds, individuals, other countries, they buy these IOUs because we have the world's reserve currency status. We still are considered, our bonds and notes are considered the safest, instruments out there, right? Backed by the US government, which is like, I don't know, backed by printing machines. But $1 trillion in interest could be used for some other good things in this country, right? I mean, we know where our infrastructure is. We know where our middle class is these days. But no, of course not. We just borrow and then we just put the money on fire in interest rate payments. So including those payments, effective interest costs over the last year hit, there you go, record $962 billion. Who needs lower interest rates the most? There you go. The US government needs to lower interest rates more than anyone, because this interest costs are, not only our debt is going up every 100 days $1 trillion, and let's add 250 million on top of that trillion, because we're paying all the all the interest to the bondholders and note holders around the globe and in the US. So yeah, we need lower interest rates, but US government, the big brother, needs more than anybody, because if we keep the rates at 5% and all the bonds that are maturing that we issued over the last 10, 20 years, they're going to get slapped a new interest on it, or new coupon on it, which is the return for the buyer. That's going to be 4 or 5%, and we cannot change that. By the way, if the U.S. government issues a 20-year note or 20-year bond or a 10-year note or a 2-year note, whatever interest that comes out with stays until maturity. We can't just go in the middle and say, "Oh, let's change it because we're lowering our rates. Let's lower it." No, I bought the note or the bond with 5% interest. You pay me 5% interest for the next 20 years. Do you see what's happening here, right? So, the big brother needs lower interest rates more than me, more than you, because this will affect it. I mean, this is an anchor on the economy, $1 trillion in interest cost alone.